right now on News Channel 8 at 5.
The Dow is recovering from a 1,000-point fall. 8 is on your side with its attempt at a comeback.
There is the opening bell.
The sound of the opening bell was accompanied by the smell of fear. It was a roller coaster kind of day on Wall Street. The Dow plunging lower, lower, and even lower in just the first 5.5 minutes.
But guys, the Dow's down 1,000 points.
The numbers slowly climbed back over the course of the day. But the last 3 trading sessions saw the loss of roughly 11 months' worth of gains. And here's a look at how the numbers finally closed on Wall Street today. The Dow dropping 588 points, the S&P falling 78, the NASDAQ closing 180 points lower. Now, investors and money experts all across the Bay Area were watching the markets this morning, just like most of us, leaving many wondering if this could be the beginning of something worse. 8 is on your side asking those questions. John Rogers joining us now live with the impact that this plunge has had on everyone, sort of a flashback, John, to a few years ago.
That's right, Keith, and financial experts say that's why a lot of people were nervous, because this reminded them of the recession that this country just went through a few years ago. But a financial expert I spoke with said, hold your horses, don't panic. From cheers to fears. Right after the opening bell, the Dow plunged more than 1,000 points. Economic uncertainty in China is scaring investors here in America, like Frederick Jacobs.
If there's a drop in the stock market, there's a drop in our net worth.
Well, we certainly don't want that to happen.
No, absolutely not.
Financial planner Scott Barcomb received calls throughout the morning.
And there's a tremendous amount of fear that has veered into panic.
He says this fear is reminiscent of 2008, when the U.S. teetered on the verge of a recession. But Barcomb says investors should not worry. Instead, be patient.
Says if you're in cash, don't buy. If you're in the market, don't sell. We don't really know what's going on. Just sit tight, put your seatbelt on, ride through it.
Barcomb says along with the concerns in China, investors are skittish because of a global slowdown in economic activity and the possibility the Feds will raise interest rates.
There are multiple smaller reasons to be concerned, certainly, but not to cause this level of panic.
Despite the rough morning, Jacobs is still confident about the stock market.
Don't panic, and over the long haul, the stock market and publicly traded stocks are the best investment you can possibly make.
So at what point should you panic? The quick answer is never. Panicking leads to bad decision making. So just keep an eye on the markets, and if you do have concerns, contact your financial advisor. Keith?
I like what he said, though. You kind of have to buckle up anyway. Just brace for what's about to happen. For those who are getting ready to retire soon, John, what should they do?
Well, they should make sure they speak with their financial advisor, make sure they look over their portfolio, and that they have significant retirement income planning. And for some of those longer-term investors, this market volatility could open up a good buying opportunity. So be sure to keep an eye out for that.
John Rogers live in Sarasota. Thank you, John.